Hey guys, what's going on? Alright, I wanted to look at this yen carry trade, right? Versus the price of gold. And in some of my videos last year and even late or early this year, I mentioned that the reason why the gold prices have gone down is one of the reasons is due to the yen carry trade. And what is the yen carry trade? Long story short, people take the yen, borrow it, invest in higher interest rate currencies such as the US dollar. So what ends up happening is the yen gets weaker, the US dollar gets stronger in terms of the yen, and you see risk on basically take place. So you got that liquidity going to the US stock market. But I'm just looking at the yen compared against gold prices. And once again, the blue represents the yen, okay? The red represents gold prices in ounces. So what I did, by the way, is I started from September 2011. I took the average from the last 10 days of the month, but every month afterward has averages for each of the months. That was the best way of compiling the data. And if you look at this, right, you've seen a slow but steadily decline in the yen over the past few years, like a 20% move, a little more than 20%. And since we've seen that move, we've seen the gold price slowly but steadily going down. And it actually slowly but steadily, or it actually had a violent move to the downside last year, okay? This was in March, right? Or, yeah, you could say that in March. That's when gold prices started to go down significantly, April. And if you look at a few things at that time frame, in January or December of that year, right? What happened was $1 got you approximately like 84 yen, okay? But then all of a sudden, like over here, and then all of a sudden we've seen Abenomics take hold, and that's when the gold prices started to significantly go down, right? People are saying manipulation this and that. I had people on my program saying manipulation this and that. But if you analyze the data, part of the reason why it went down, gold prices, is the yen carry trade, right? The yen started to get weaker. And then some people will say, hey, that's manipulation. Sure. Everything's rigged. Up, down, and sideways. That's the point. But if you want to look at it specifically why gold prices probably went down. Two reasons. It was in a bull market for 10, 11 years. People or institutions decided to take profits. And B, you had Abenomics. So you can see here yen getting weaker. And you saw violent moves starting from like December, right? $1 got you 84 yen, and then all of a sudden, up until right now, like $1 gets you 102 yen. This chart actually shows you like $1 gets you 103.46 yen. So this can explain in a logical manner why gold prices went down. So this is what I see happening. And if you look at these moves from 2011, right, you see risk on in the United States and Japan, but eventually I don't see the yen continue to debase itself unless they face a currency crisis. Because what happens is you have all this liquidity extended, and then if you see any talk of withdrawing this liquidity, like we've seen with this taper talk, then there are going to be dislocations within the worldwide economy, like we're seeing in Argentina, like we're seeing in many emerging economies as well. Turkey, Ukraine has currency problems, but that's a different issue. Long story short, the way that I see it, the yen carry trade is partially responsible for why gold prices have gone down. What do you guys think about that? I've always been talking about it, but I finally got some graphs to show it. I mean, I've showed some graphs on Yahoo, but those graphs weren't that decent, right? Because I was just using the GLD to compare it. I'm actually using actual average prices of gold now and average prices of the yen. So what do you guys think about that? Leave your comments below. I'll talk to you Monday. I'm going to be really busy tomorrow. Won't have time. So see you then. Bye.